Hi, welcome back to another episode of Fundamental Analysis. Today we'll talk about investment banking industry. Again, one of the activities that a full-fledged investment bank offers. This time we'll talk about investment banking. The different names that we have for investment banking: corporate finance. I have also mergers and acquisitions department. Basically, investment bankers, they actually help clients, who are usually companies, to undertake one or more of the following activities. There's a team of investment bankers who actually you can think of them as financial advisors. They're not just talking about they're not just advisors for financial stuff. They can be advising also for legal issues, and they can also discuss operational issues to make sure that their clients actually increase their efficiency in their operations. The purpose is, at the end of the day, is to maximize shareholders' value. To maximize shareholders' value. Okay. What do investment bankers help clients in doing? They have different things that you can do. Number one, they can raise equity capital. Let's look at the balance sheet of a typical client. Say they have the assets, liabilities, and equity. They can actually increase their capital by increasing their equity, by listing in the stock market, by getting maybe a strategic investor in the company, or whatever they can do to increase their equity. Let's say that the client does not have debt. It's basically have zero debt. So let's say one of the ways to raise capital is by issuing debt. This number two. They can actually raise capital through borrowing, by borrowing from banks or issuing bonds in the market, in the capital market. Could be a combination between banks and bonds. At the end of the day, we are, as an investment banker, you are a financial advisor trying to give the best advice to your clients. And usually investment bankers, they're the ones who are wearing those black suits, trying to offer this high quality advice to their corporate clients. The third one, or the third activity that the investment bankers can do, basically finding investment opportunities as part of M&A. And this is why they call investment banking department as an M&A department. And basically they try to find investment opportunities for them to buy. So let's say the client wants to buy a company, and they're trying to find those target companies. Let's say they have a clothing company, and you want to integrate or have a vertical integration. So you're looking for a retail outlet. So you could actually be looking to buy a retail company, or a retail company in the retail business. So this could be another expansion for the client to invest in other different types of business. Number four, you can also have you could try to seek suitors or interested parties in your client's business. Try to sell. Maybe the client wants to sell out of the business, and they want to have buyers. They want to have some buyers who are interested in our company here. So we have here, when you try to find opportunities, you are working on the buy side, or if you're trying to sell your business to a different to someone else, you'd be advising on the sell side. Last but not least, we have also the corporate structuring, where you can help organize the company, or help try to change the structure of the company, whether organizational wise, maybe changing the corporate structure, or changing the financial composition of their financial statements, like the balance sheet. Maybe add more debts, reduce debt, add equity, depending on what you want to do, and try to maximize the shareholders' value. Maybe one way is by going public and going for the IPO, initial public offering. And this would be one of the ways to capitalize, of course, on the company's business. Thank you very much. We'll talk again next time about a different service. Thank you.